we have finished. Above is a reconciliation and below is in or out. So we are looking at a watershed moment here as we move into interest paid de, taxation paid de, pension contribution paid de. We are now starting the cash flow proper. Interest paid. Interest paid. I'll tell you what I think. I think it's 8. I think if you look at the P&L, what you see in the P&L is a finance cost, and you see in the P&L a finance cost of 8. No. 9, sorry, I've got the wrong line. Finance costs are in brackets, aren't they? So finance costs are 9. So I think we have paid 9. And 9 is often the right answer. Unless there's some information in the question which tells us it's not 9. Unless there's some information in the question which relates to the finance costs, unless there's some information in the question which indicates that we still owe some of that 9. Is there such information in the question? Yes or no? Yes. Oh, I didn't hear many yeses. I think there is, and I'm prepared to do a small working, but hang on a minute. Where's the information to be found? Note number 6. Short-term provisions are finance costs. What is the short-term provision? How much interest do I owe at the year end? How much interest do I owe at the year end? 5. How much interest do I owe at the beginning of the year? 4. So my liability has gone up by 1. So I charged 9, but I haven't paid 9 because my liability's gone up by 1. So how much interest have I paid? Well, I should have paid 9. If I paid 9, my liability would have not gone up. There's an extra amount of 1 that I haven't paid. So in my world, I've only paid 8. But that's a little bit aggressive for some people, and I'm happy to do a working to show you where the 8 comes from. So let's do a working. It's not, I hope, a complicated working. I'm trying to work out the interest paid. I know it's a payment which is going out, and I know it's an operating activity. That's what I'm looking to sort out. Now, I have an opening balance as a liability. I have as an opening balance a liability of 4. In the P&L, I've debited 9. In the P&L, I've charged 9. In the P&L, there is an expense of 9. So this means that I should have paid 13. This year, I should not only have paid the arrears of 4, but I should have paid this year's expense. Having debited the P&L, I've credited the liability. If my year-end liability is nil, I've paid 13. If my year-end liability is nil, I've paid 13. But my year-end liability is 5. So as a balancing figure, the amount that I've paid is 8. If I've missed something out, if there's a further problem about interest somewhere in the question, maybe I'll come across it later and I can change things around. But at this moment in time, I am happy that the interest that we've paid is 8. You've got to make a few decisions. Yeah? Taxation paid. Nightmare, taxes all over the place. Pension contribution paid, your call. Pension contribution paid, your call. Let's have a look at note number 2, because there is a story about pensions in note number 2. $96, 10, 10, 403. So there are half a dozen numbers. I suspect there's some TMI. You can't put all of those numbers in your cash flow. Only one of them will be a payment that we have made that is cash going out. What is that number, please? 10, correct? Brilliant, well done. Decision made. We put in 10. How much was the expense? 10. We've debited the P&L with the expense. Call it current service cost if you want. We've debited the P&L with the expense, current service cost, past service cost, settle. We've debited the P&L and we've credited the liability. That expense is a non-cash expense, because that expense for the period has been charged to P&L and has increased the liability. So I have here, I'm going to call it my current service cost, because that's a better word for it. Yeah, my current service cost. Yeah, but it's described as your pension expense, but it's the same thing. Your pension expense is your current service cost. So we're adding back 10. It does annoy me they're both 10, but whatever. Right, here we go, here we go. Investing activities, here we go. Yeah, I've left tax out, I'm scared of tax. Presumably I buy PPE. Presumably I buy PPE. I have an associate, so presumably I will have a dividend received from associate, and I also had other income. So I've got a few of these knocking around. I've got, yeah, several of these things. Judgment call. Judgment call. Do we look at PPE? Do we look at PPE now or do we look at PPE later? I don't know. Should we have a look at it now? You're up for it? It's quite a lot of information. PPE comprises the following: opening, 360, additions, gains, disposals, depreciation. That was easy. That was easy. It says in the question, the additions were 78. Is it that easy? I haven't properly read it, or have I? But, you know, it says it's 78. It does say that, doesn't it? Additions are 78. So I've written in 78. PPE included a carrying value of 1, has been destroyed by fire. The asset was replaced by an insurance company with new plant and equipment, which was valued at 3. The machines were acquired directly by the insurance company and no cash payment was made. The company included the net gain on this transaction in additions of cost and other income. Okay, I'm beginning to get this. We have an item with a carrying value of 1. That gets destroyed and is replaced by a new asset of 3. So the asset of 1 disappears, the asset of 3 comes in. Now that gives me a net gain of 2. Now that net gain of 2 has been included in additions. Did I pay cash for that too? No. That should be 76. Yeah? Is that all right? I've removed the net gain of 2. Yes? No? Yeah, that's right. Now what about the other 2? The other 2 was included in other income. So the other income is 31. The other income is 31. So I might have expected to physically have received other income of 31. But I'm removing the net gain. I need to slow down perhaps, because actually it is straightforward, guys. The net gain is 2. 2 is included in the 78, but you didn't pay for it. 2 is included in the 31, but you didn't receive the cash of 2. So of the 31, I'm assuming we've only received 29. I better read the information over the page as well. Disposal proceeds were 63. We've dealt with that. There's a deferred tax of 2, whatever. And the remaining, the remaining additions of PPE comprised imported plant. The cost of the PPE was 380, 280 was paid, and these are the following balances, exchange rates, and there's an exchange gain or loss included in admin. The remaining additions of PPE comprised imported plant, and the cost of that PPE was 380 million dinars. When we bought the dinars, when we bought the PPE, that was in June. What was the exchange rate then? 5. So there are 5 dinars to $1. If there are 5 dinars to $1, do we multiply or divide? Divide. What is 380 divided by 5? I'm going round in circles. 76 is the right answer. 76 is the amount that I have paid. 76 is the amount that I have paid. Because it's 78 minus 2, because you stripped out the 2, and then the question has just told me that we bought the plant for 380, yeah? And that if we take 380 and we divide it by 5, we get 76. So 76 must be the right answer. Is it?
Yes.
The cost of the PPE was 380. The cost of the PPE was 380. The cost of the PPE was 380. But how much was paid? 280. So 280 was paid. And when was that paid? October. So it was paid when the exchange rate was 4.9. Answer's not 76 then, is it? Answer's not 76. 280 divided by 4.9 is how much? 57. Yeah, thank you for avoiding decimal places. That's the real payment out. That's the real payment out. Oh, a bit messy, isn't it? Yeah, this is life. Yeah, this is what happens in the exam. Yeah, this is why you leave space. Okay? 78's alright, 76 a lot better, but 57 is the right answer. Right. Have I squeezed it dry? Have I squeezed it dry? Is there anything else that I can extract out of this? Yeah, there's an exchange difference, isn't there? And that exchange difference has been included in administration expenses. So there is an exchange gain or loss arising on the retranslation of this liability. Because when we bought the asset, we didn't pay for it in full, we've only paid for part of it. So at the end of the day, we actually have a liability of 100 dinars. That is a liability which is retranslated at the closing rate. What is the closing rate? 4.8. So this is, yeah, this is spot, closing. Yeah, spot, closing. Transactions, monetary balance. Spot, closing. In dinars, beautifully adds up. In dinars, beautifully adds up. What we're looking for here, what we've got here, are two different numbers. 76 minus 57 is 3, is 19. But 100 divided by 4.8 is 21. OMG. What a brilliant examiner you have. You think you're doing a cash flow question and you're being tested on pensions. You're being tested on exchange differences. You're being tested on associates. Gain or loss? Well, it's either a gain or a loss, isn't it? It's one or the other.